Some very surprising new developments with Tesla and Toyota just happened this weekend. First, Tesla has introduced a brand new Model 3 rear-wheel drive in Mexico. What's interesting about this is that this version of the Model 3 has a lower cost, textile-based interior. They've removed the heated and ventilated seats in front and rear, they've removed the rear seat screen, and a number of other changes. Is this a test of a lower option for pricing, now reducing the price by $2,700 US? Will they do the same for the US and Canada in the future? Second, Rivian just announced they're halting production of their Amazon delivery vans due to a parts shortage. This comes right when a Cybertruck has been spotted in China's streets. Third, in a major announcement, Toyota is now saying they're going all hybrid. They will stop making gasoline-only vehicles, but instead move towards making their entire lineup gasoline-electric hybrids. Jeff Lutz is a multi-decades supply chain executive and chief quality officer. He's now the CEO of his own supply chain consulting firm. Thank you very much for joining me, Jeff.
Hey, Herbert, great to be with you. Well, there's a lot of stuff going on.
These are big improvements. I wanted to ask you, you've been talking about what happens when Tesla continues to reduce, you're the expert, right? Supply chain, cost of goods. Can they keep making these different, continue to reduce the prices? Some people thought that's it. Model 3 can't go any lower. And now we've got this news. So you got Tesla introduced a brand new textile interior option. Right now it's exclusive for Mexico. Model 3 rear-wheel drive. It's gray. The seats, it's the only interior option available. The Model 3 are rear-wheel drive for the Mexico market. You can see here what it looks like. It's actually not bad. I don't think that looks low end at all. In addition to that, no heated or ventilated seats in the front or rear. The rear seat screen has been removed. White ambient interior lighting only, no multicolor, no heated steering wheel, acoustic glass on front windows only, and all the others have it on all windows. So you can see the repeat here of that manual rear vents, unchanged sound system. Here's where they were able to show that the price reduction is now by $2,700 US dollars. And I'm going to show some photos here. White ambient lighting instead of colored. This is the customized. This is what you normally get. Now you don't have these heated seats available. This is what you normally get. Long range of performance versus this textile. And you used to have this rear screen. You used to have a heated steering wheel. Now that's gone. What's your thoughts, Jeff?
What Tesla's doing is they're filling out their portfolio of tiered offerings and price. If you notice, they introduced the all new Model 3 last year in China, and everything, and then the performance version and everything, and all the bells and whistles. And they've been able to take the cost down as they ramp the product up. And now they've introduced rear-wheel drive versions, standard range, and now long range, and now they're introducing this version for Mexico. Mexico is ramping up in terms of EV buyers, and BYD and other China players have entered there, and it's a competitive market. And Tesla believes that they could garner sales if they could just continue to take the cost of the vehicle down. So what they did is they focused in these areas where they can kind of modularize the design and simplify it. And so this does add complexity to the factory. There's no question about that. But depending on how they build these, they may build them in batches. If they build them in batches, it's less of a issue for the factory versus doing a build to order. So it'd be an interesting question to Tesla would be, are these build to order? Are you building just batches of various colors and moving them into the market? That would be an interesting thing to understand. But they're basically, think of the 3 and Y, and they're continuing to introduce these lower cost configurations of them. And what they're doing is they're building a bridge to the first half 2025 vehicles, these vehicles that are going to be introduced between the 3 and Y today and the full next generation unboxed model. So that's what I see Tesla doing, is basically filling out those tiers. And instead of just slashing the MSRPs or putting more promotions on, they're going into the vehicle, they're simplifying the vehicle, they're removing features. And these features that they're removing kind of fit the market. I was just speaking specifically of like removing heated steering wheels, for example. It more fits probably the larger demographic they'll be buying in Central America and so forth, given the climate and so forth. So anyway, I think they're just building this bridge of various configurations lower cost configurations to build between where they are today and then to these new vehicles. I think in the future, Tesla will look at the sales of all these different configurations, and you may see them remove some if they're not successful. I think Tesla's always focused on simplifying things for the factory. But I would say right now there's more configurations than they've experienced before, but far less than any of their competition today. So they're still getting the supply chain leverage, but they're introducing new configurations at a lower price point.
So I wanted to ask you, Jeff, so you seem to think is this more about separating it from the premium and long range as opposed to trying to lower the price even more? Which one do you think it is?
No, I think they're trying to introduce product at lower prices so they can compete and pull business at lower price points. So I think that's what they're doing. I mean, and while they're doing that, they are, to your point, they are adding some differentiation to those other tiered version of offerings. But I think they're honestly just trying to make the barrier to entry lower.
Okay. And then from your experience, when you do something like this, right, you want standardization across everything. Do you or don't you? This is in the Mexico market. How likely are they going to introduce this in the US? Currently, right now, this Model 3 rear-wheel drive version is only in New Mexico. It's not yet in the US and Canada. What's your thinking? What's your guess? Is it going to move eventually there?
I mean, if it's successful, I can see them doing that. And maybe it would be at the expense of another version and reducing it. The other thing that Tesla is doing is I think they're returning back to unit growth in production and deliveries in the third quarter. So if you're a supplier to Tesla and you see what the other OEMs are doing mostly, which is basically pulling back volumes, and if you're a supplier to Tesla, you're a supplier to any company actually in the world building cars, and you get a Model Y award or a Model 3 award, you're going to be on one of the top volume vehicles out there as for EVs, and then for the Model Y in total. So I see Tesla returning back to unit growth. They forecast for 2025 to have production 50% greater than the 1.8 or so from 2023. So I see Tesla returning to growth, and they're going to leverage that, and they're going to drive some volume with these lower tiers. But I want to be very clear. They're adding complexity to the factory. There's still significant reuse between these models, but this does add some complexity. But the way you counteract that complexity is how you handle the build planning and manufacturing systems. If they make it build to order, then the complexity, I think, is quite onerous to deal with. But if they start building these in batches and just get them out and push them out into the market, knowing that they've got distinct demand maybe for fleets and other vehicles, then I think it's manageable.
Thank you, Jeff. Okay, so let's start. Next story here is Rivian. You got Rivian announcing that they have to halt production of their Amazon delivery vans. By the way, these vans look awesome. I love them. Temporarily suspended it. And they said that's because of a shortage of parts. I want to ask you about that. The latest in a series of supply chain challenges for Rivian, which, like other EV makers, have grappled with significant production issues over the past 2 years due to supplier shortages. Now, Amazon said it's aware of these short-term production issues this month, did not expect it to have an impact. As you remember, they had already reduced what they had initially promised to buy from Rivian. It's now just 100,000 electric delivery vans to be deployed by 2030. But their sales are significant, 20%, 19% of Rivian's revenue. And then, just earlier this month, they maintained their production forecast, said that deliveries would be slightly lower in the current quarter after it shut down its factory in April for retooling and modifications. And now this news.
Yeah, if you remember, I think it was last year, Amazon shut out a bunch of very recent orders. I think this relationship between Amazon and Rivian's interesting. The Amazon has an investment in Rivian, but in terms of their take or pay terms for these vans, it feels like Amazon could just turn this thing off whenever they want to. So I would want to double click into this a little bit more. The industry right now, I'm not aware of any major part shortages. It doesn't mean it can't happen, but usually these things start happening when suppliers are second guessing the demand signal of the main OEM because of prior issues. So last year there was this issue where Amazon just shut off deliveries, and I think Rivian took on a bunch of inventory, and I'm sure some other suppliers took a hit as well. So not sure exactly what happened here. I wish there would be a little bit more investigative reporting by these companies writing articles. Okay, which part is it? How did this happen? When do you expect to recover? You don't hear any of those details. So I'm a little bit suspect. Sometimes when OEMs run into trouble, whether their we don't know their channel inventory of these vans. The channel inventory is growing. Sometimes they don't want to say, hey, look, we've got a demand problem. So sometimes they tend to point to, we have a shortage, or we have this or that. So it'd be interesting to double click in it, because right now the industry is not fraught with shortages. The industry is actually oversupplied in most commodities. So I'd be interested to understand what the actual shortage is. And also what's going on with this relationship between Rivian and Amazon. Are the vans performing to spec? Are they adding value? There could have been, for example, a pricing negotiation where they just came to a stalemate and said, okay, we're not going to build this. And then, okay, we have a part short. So it would be interesting. It could be a number of things. I'm just speculating at this point. I mean, it could actually just be a part shortage, but right. I wish there'd be a little bit more investigative reporting on it.
Fantastic, Jeff. This is why I wanted to ask you, because you know this stuff. You've been saying already before that once a manufacturer partners with a supplier, if you can continue showing them that you're increasing your volumes and you can keep promising them and you stick with your promise, they're going to commit to you. You're going to be at top in line. That's just Tesla. The other guys who then back out and says, oh, we're not going to produce as much anymore. Maybe this is what happened, right? Maybe. Could be.
Yeah.
But I also like your other bit about maybe they're not performing as well. Who knows, right? We'll see. Yeah.
Yeah. It'd be great if a reporter would just ask a follow-up.
These are gorgeous, gorgeous fans, by the way. I love them. Look at them. They look great. I've seen them on the streets here in Seattle, and they're just gorgeous. I love the back. Just makes it look so nice with these red lights. These are the vans. They look good. So hopefully they succeed. I'm sure they'll keep working. All right. So another fun story here is Cybertruck. So there was a first imported Cybertruck spotted in China. It's road legal with a green license plate. Thank you, Ray. Tessa Chan, he's often our go-to there. It's the first Cybertruck to get an official license plate and walk around in Chinese roads. I'm sure that's a meaning to say that. This Shen Guo just said this: Tesla Cybertruck can legally drive in China. It's directly imported by the dealer, not by Tesla. The price in China is said to be about 4 times of the price in the US. We don't know if this is real or not, but this is one video to show that it's actually out there. And another one, I'm going to take that off, but basically this is report in China, Chinese news talking about it, that it's driving around. What's your understanding of all this?
I want to take this in another direction. There's been some just moronic tweets from Tesla Q about seeing a number of Cybertrucks that are built up and they get distributed to inventory. This story alone tells you that this dealer imported it and they paid 4 times the amount in the US. It just tells you this is just one country outside of North America. It's about to be released in Canada. There's tremendous demand for this product. There's tremendous intrigue. I was just looking at the Sentry notifications on my car. I drove it to a couple places over the weekend.
Yeah.
And there's just people coming up to the car left and right. They're smiling. They were taking pictures next to it. Again, all anecdotal. But when you see Tesla has significantly picked up their production, my guess is they're at a much higher run rate, probably closer to 15,000 a quarter, maybe more. There's some interesting anecdotal information that came out this week that production's really picking up on the Cybertruck. And what that's going to allow them to do is it's going to allow them to take their costs lower. And I don't think they're going to have a problem finding homes for these at all. And I think, up to this point, everything's still being ordered under the Foundation series. Open it up for Canada. Who knows? They may be able to open it up for Mexico and other neighboring countries. And then, I personally believe that they could open up the Foundation series globally and continue shipping this product. It's a great value when you actually look at what you're getting in the Foundation series package. And so I just wanted to take the moment that there's just so much demand for this product. I think it's going to do well in multiple countries. And as this product scales, Tesla can take the cost structure down. I think they're going to have to make changes in the product, changes that we mostly won't see as consumers, but changes in their production system, changes in how they manage some of the material properties. And I think they're going to take another cut at this thing and continue driving it. That's why they extended the Foundation series to the end of this year. But my key takeaways on Cybertruck is it's in high demand. You see all of these one-offs in multiple countries, and people are highly coveting the product. And I think there'd be tremendous demand if they launched Foundation series globally. It would stay sold out for another year. And but I think what they're going to do is at some point in the first half of next year, they'll transition and they'll be able to start selling the non-Foundation series. So I think great demand. This is just the first in China and in multiple countries. I think it's going to be approved to ship in multiple countries. And I think it's a runaway. I think it's going to be a runaway hit for Tesla. It's such a good product.
And so your Tesla, you know exactly you kind of know what's going on because you've got your own Cybertruck. You know what they're doing with the Foundation series. You know their manufacturing scale. When do you expect that when would you expand to other countries? Next year, 2 years from now?
Yeah, well, we know they're expanding to Canada, and it'll start, I think, delivering this fall. And I would continue doing that if it's Mexico or another. I would continue expanding. To be honest with you, the nice thing about Tesla doing Foundation series and launching in the United States is they keep the source of supply and the customer base very close together. So there have been some technical issues. Right. There have been some quality issues. I told everybody a year ago I was a fan of this very low volume launch in November and through the first quarter. Just get a couple thousand product out and then let it sit with customers, experience all the issues and get them fixed rapidly, make it right for customers. This rollout of the Cybertruck, while it's taken Tesla Tesla guided for 12 to 18 months actually to get it to its cost target. That was Elon's guidance last year. So I don't think they're outside of that guidance. I think everybody else thinks it should be faster. This is such a complex product. We have such a complex product. You do a controlled introduction the way Tesla's doing it. Keep the factory and the customer base very close. This fact that they're opening it up to Canada, and I think they'll be able to open up to other countries in the first half of next year. And I think it'll do very well. And I think they'll get a lot of these quality issues knocked out.
Okay. Thank you, Jeff. So we have a big story about Toyota. They're talking about going all hybrid and no longer just doing gasoline only cars. Before we get there, let's talk about Tesla, BYD, and Toyota. So this is James Stevenson. He often comes up with fantastic analysis and charts. He said Tesla's detractors and short sellers like to emphasize how much automotive gross margin Tesla has lost since reducing prices early last year. But Tesla's margins have held up well, still near Toyota's, which some consider to be the industry's gold standard. You shared this table, and you can see that if you look at the yellow line, that's Toyota's gross margin, automotive gross margin. They're around 18%, even popped up to 22%, whatever that is, and then around 21%. Meanwhile, Tesla's gross margin, if you look at the blue, that's excluding the regulatory credits. So let's take a look at that one instead. It was certainly really high in 2021, mid 20s at near 30%. Then it fell. So everybody's freaking out how, terrible the gross margins. It's no longer a growth story. But actually, if you look at where we're at here, around 16% or 14%, just below, this is without regular credits. It's still pretty close to where they're at. What's your thoughts about automotive gross margins, Jeff?
Yeah, I do advise clients on cost structure and costs, and I have a lot to say about this. So in 2021, I actually don't believe that those are the real gross margins of the company. So in 2021, there was this COVID surcharge epidemic that occurred where all the input prices went up. Tesla as a supply chain had their multi-sourcing working. They had their source of supply close to their factories. They had to make part changes, but they can do them all very quickly. They didn't have everything distributed all over the world to feed one single factory. And they were able to recover during COVID, and they were able to get supply out to customers. So EV adoption was growing. Tesla had supply. No one else didn't. And the wait time started growing because people, if they wanted a new vehicle, they had to order a Tesla because a lot of ICE or EV were not in supply, with the other auto manufacturers. So I don't believe the 28 to 30% gross hardware only gross margins that they were experiencing during that time. FSD was not, a big adder in that. But so where I see them being nominally is closer to the 20% range. I think they should be able to get back to 20%, just vehicle hardware only. But now the whole picture's changed. Now you've got FSD supervised that's running so good. It's such a good product. And they're able to do different pricing packages now and different offers for it. And Tesla's also, they had a rougher first half on volumes, and now they're returning back the volume. So I believe that they're going to be able to march these gross margins back up. They're not going to get to these levels that they were during COVID, but they'll, at least from a hardware only perspective, they should be able to get to the 20% range again. And then really, this is where Tesla takes gross margins just to a new level in terms of adding the FSD supervised, unsupervised, and then eventually robotaxi. I think it changes everything. But that spike that occurred in 2021, I don't view that as real. I know the markets reacted to it. I know everybody thought that, this is, they're going to build cars at 30% gross margin or 25 to 30% gross margin in perpetuity. And I don't believe that was real. There was a supply issue in the industry. Tesla had supply. Tesla was able to work with their suppliers to keep them going, and they were able to keep their costs relatively low, even though their input costs came up. And then what happened then in the January to April timeframe in 2023 is Tesla did a MSRP correction. I think people get confused that Tesla was just indiscriminately slashing prices because of demand. What Tesla was doing is they're coming off of the COVID surcharges that suppliers were charging that Tesla needed to charge, and they took all those out, and then they took MSRP down, in advance of it, certainly more. But then if you look at Tesla's MSRP reductions from May of 2023 to where we are now in August of 2024, they've really kept up within 1 or 2% of their ability to reduce COGS. So in summary, I don't think the 2021 period that peak was real in hardware only margins. I think there was a lot of COVID mixed into that, low industry supply, high supply from Tesla, high input cost driving the MSRPs up. And, but I think Tesla came out of this better. And I think their hardware only margins are going to be at 20s, but this whole story is going to be rewritten with FSD supervised, unsupervised, and then eventually robotaxi.
I hope many of the analysts who watch the show hear this yet again, because they still stuck, many of them, with this idea that Tesla should not have reduced their prices. Look what happened to the margins. Stock fell because of that. So thank you for explaining that. So here's some more information from Roland Percher at Pololi on X. Tesla's the leader in battery electric vehicle sales. Those compared to BYD and to Toyota. Let's take a look. BYD did manage to sell more battery electric vehicles than Tesla in just one quarter, but since then, they've not been able to do that yet. And then, of course, Toyota is not selling battery electric vehicles at all. Toyota's in the red. As you can see that they don't really sell battery electric vehicles, but will tell you the story why that is. They've really decided they're going to go full hybrid, and they're going to stick to hybrid, and that's their strategy. But if you look at the yellow, which is BYD, only in the fourth quarter of 2023 did they beat Tesla in battery electric vehicles. It fell off the cliff in the first quarter, and there's kind of sticking there. So BYD sales are there. And if you compare BYD with Tesla in China, you can see that BYD has 18 models and versus Tesla has 2. And of course, in the future, they're going to add some more affordable vehicles and then maybe a robotaxi too. But that's just, I wanted to ask you this because you know this. Yes, BYD generated 33% more revenue than Tesla in July in China, but that's because they have 18 models. And I think you just said last week, didn't you, that there's only a 15% cross overlap between these models and these other models?
Yeah, the MSRP, the average selling price of these vehicles is well below $20,000 US dollars, and Tesla doesn't play below 30,000 US dollars. So there's very, very little overlap. They just have a few models that are above 30,000. But there's literally, and this is self-quoted by BYD, there's literally like less than 15% overlap, both from a cost tier perspective or a pricing tier, as well as geographies. Now, obviously in China, they're competing, but in global geographies, there's actually very little overlap. But I think this is what people need to keep in mind when you're looking at a volume sales slide from BYD. They're selling vehicles that are well below $20,000. So their volume should be much higher than they actually are. The fact that they've only been able to surpass Tesla volumes in one quarter, where Tesla vehicles are all above 30,000. The average transaction price, I believe, is somewhere between $44,000 and $47,000 globally. It tells you that there's a distinct advantage here from Tesla, and all they need to do is to continue to drive their cost structure lower, give great value to consumers, and continue to step it down. We saw it with the announcement for the model from Mexico, and we're going to see this with the first half vehicles that are going to be announced, and then the unboxed model. So when Tesla starts entering into these price tiers, I think it's going to be a real problem for some of these other players. Why? Because the Tesla brand, number one, is received very well globally. They have a global software platform that is localized and usable in all these different countries. Tesla plops down in the UK or Germany or France or China or whatever. It's got a software package, localization, everything that works for that region. And soon, on top of this software package, is they're going to have full self-driving. And remember, these are the sales right now where Tesla sells everything above 30K, and they don't have full self-driving approved. So imagine when full self-driving is approved and they have these vehicles that are now at these competitive price tiers that others are playing in. It's really Tesla's game. It's really in those tiers is BYD's game to lose, and Tesla is going to enter in and I think take a lot of volume away. So I always find the comparisons interesting. They don't compete today, but they will be competing in the future.
Thank you for that. Now, Toyota, of course, is the big behemoth. So I'm very interested to hear your opinion about this. So they have made a decision that they are going to go hybrid only at this point. They're going to bet big on this. They say that the EV demand is slow. People don't want electric vehicles. They have their ICE cars now. They do have a very successful hybrid lineup. Toyota does. And then now they're saying, hey, we're going to stop selling our gas-only cars. They're all going to be hybrids at this point. This is the new Corolla sedan hybrid. So it's, they are the slowest legacy automaker to develop electric vehicles, but they're going to be the first to say, hey, we're no longer going to do gas only. They're now going to do their entire lineup. It's going to be gasoline electric hybrids. And then, obviously the big hoo-ha is that it's basically a gas car, but they just add a small battery to it. And they're going to say, hey, we're going to try to add a little bit bigger batteries. It's still a hybrid at the first place. What's your thought about this strategy that they're talking about here?
I just think from a first principles perspective, they're building more complex vehicles with two propulsion systems, while the electric is smaller battery size and so forth. It's almost kind of like a compliance thing that they're doing. I would love for them to actually, especially a company like Toyota that's really focused on simplicity, part count reduction, Kaizen as a process, right. Which is, I would be interested for them to understand from them of, what if you just picked one propulsion system that you think the winner is? Could you build a simpler vehicle at a lower price point and serve more of those consumers in the future? So I'm a little bit baffled by this choice. They are doing well in hybrid. They have really the second best supply chain in automobiles. Now, this is argued back and forth, but there's an external company, Gartner, who does ratings of all supply chains actually in multiple different industries. And in terms of their top 40 last year, there were only two auto companies that made that list, Tesla and Toyota. Tesla was number 14 on the whole list of all companies. I think Toyota was about 20 or 25 slots lower than that. But they did make the list. They have a very good inbound supply chain. They're very good at cost management. And they have about 27 to 30 days of inventory. So they're very good, and they have a dealer network. So they're pretty good at that. I would say their balance sheet inventory is pretty high. It's grown 20% over the last 4 quarters. I've been monitoring this, and their balance sheet inventory, like what they have in their factories in inventory, is grown to about 40% of sales. So why is that number important? Well, it's a big amount of working capital that's on your books as a percent of your sales. The comparison for Tesla has about 13 or 14% of their quarterly sales as working capital sitting in their factory. So a much lower number. So this will be interesting to see how this plays out with Toyota. But the whole thing about hybrids, if you look at ICE plus hybrid in the United States, for example, we are flat. Sorry, total vehicle sales is flat to potentially turning to lower. If you look at the SAR, the latest SAR coming up this month, which is the predicted annual sales into wholesale in the U.S. ICE, hybrid, EV altogether is about flat, and it may turn to be net lower. And of those 3 propulsion systems, EVs are higher year on year. So that means ICE plus hybrid are actually going to be negative year on year. So hybrid is doing better, but ICE is really bringing it down. So I can see why Toyota is doing this, but to me, it doesn't look like the most efficient move that they could be making. But maybe this is all they have because they don't have a viable EV solution that can compete profitably yet.
Yeah, the problem is that hybrids do qualify for the federal credits. Tiny little battery, they slap
in
it
the
on,
US. Yeah,
they get it. And unfortunately, it's going to be a battle, right? It's going to be a battle to try to convince consumers, oh, it's electric. And then they can be confused to think it's better because you can take advantage of both. So we'll see what happens. But this is a big decision by Toyota. You kind of knew it was headed this way, but they announced that now this is it. They're going to go all hybrid.
Yep. Interesting.
Okay. Thank you so much, Jeff. Follow him on X, the Jeff Lutz, and subscribe to him. This is the kind of deep information you're going to get. And he's one of the best. Thank you so much, Jeff. Appreciate you.
Thank you, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.